Let's move on and get to some more corporate conversations, look at some more earnings as well. Metro Brands reported what looked like a bit of a mixed set of numbers for the second quarter. Revenue growth was up, but margins were contracting marginally. Sales were perhaps impacted by the delay in the festive season. Let's actually go through some of the numbers as well. Revenue was up about 17% year on year. Margins came down to 56.8%. PAT was down about 13%. So we've got the company's management now joining in. Nissan Joseph, Chief Executive Officer of Metro Brands, is with us. Mr. Joseph, thank you so much for joining in. Can you, talk us through the trends and why was there this compression on the operating profits as well as at the bottom line level?
Sure. I think what you're also looking at, first of all, thank you for having me here. You're looking at our consolidated numbers, which included some of the cleanup numbers that we needed to do from our recent acquisition of the Fila brand, right? But if you look at a standalone number, we had growth across the board. We did have a 17% growth in a consolidated basis. It was actually 15% on a standalone basis. And in that number, we did have the offset of the seasons like everybody's been talking about for Q2. And we've seen that as we've lapped that and come into the Q3 area, we've seen those numbers get more positive, right? So it is like we thought. So what we saw in Q2 was actually what I call demand and timing headwinds, but not economic headwinds, right? So the demand is obviously slow because of the timing caused by the shift in the seasons. But all the indications that we see today in the midst of the Diwali and the wedding season is that that was really a timing headwind and not an economic headwind. We still believe that the macro conditions for our business to the premium consumers still is solid.
Okay. All right. Good morning, sir. Thanks so much for joining in. Well, when we spoke last time around, you were telling us that you're expecting to grow in high teens, margins approximately 35% odd on the operating front, and PAT margins around 15%. Holding on to all these three numbers, or is there a possibility you want to upscale, say, the revenue growth?
I think we're very confident that our revenue will continue to grow in the high teens. Our EBITs will be north of 30%, and our PAT will continue to be, 15 to 17% range. And, I think there was a little bit of a scare for everybody in the industry as we went through Q2. I think we had predicted that number to be a little bit more muted because of the shift in the seasons. And don't forget, we're also going against a lot of pent-up demand for last year. So really, when I go back to the timing headwinds that I mentioned, it really has to do with two things. Of course, the festival shifting. But last year, this time, there was so much pent-up buying going on. And that pent-up buying, by the way, keeps declining a little bit, but it's not like it disappeared overnight. So it'll keep declining through this Q and Q4. And you can see that in our numbers. Q1, we were only up 11%. I know not many people would say that only, but we were up 11%. In Q2, we were up 17%. So you see our numbers starting to grow as we see last year's impact declining from the pent-up buying. And then you have the festival shifts that have also impacted Q2 that flows into Q3.
Mr. Joseph, hi, good morning. Prashant here. Investor I met recently, he said that shoe companies are a great ways to play this premiumization story because, they benefit, one, from premiumization because everything high-end is doing very well, not so much at the lower end. Second, of course, is that there seems to be a culture which seems to be taking hold of, and people are now shoe collectors, right? A lot of, I know here in office, many who are actually crazy about shoes, sneakers, and the like. We'll come back to some of those trends in a bit, but I just wanted to get some specific numbers for premium brands such as J. Fontini, Da Vinci, Crocs, Skechers. What has been growth like?
Yeah, so I think you nailed it on the head. By the way, we love all your sneakerheads in your office. You tell them I said that. I think what we've seen in that category, if you look at our sales of shoes over 3,000 rupees, that has grown from 44% in Q1 up to 48% in Q2. And we're seeing a lot of demand for premium products, not only because, I think people are being shoe collectors necessarily, like you said, Prashant, but also because middle-class incomes are rising. Disposable income is rising. People see that there are good things that they can afford. I think one of the things COVID taught us was, we're not going to buy crap anymore, right? At COVID, we looked around the house and we said, we got too much crap. I'm never going to do this again. But I think what they're saying is, and it's not necessarily premium, but they're actually starting to see the value in these products, right? If you invest in a pair of shoes, not only do you feel good wearing it and look good wearing it, but it also lasts you an equivalent proportion of time longer. So we are seeing a lot of good moves on the premium side. At the same time, I think there's an overall sentiment that it is not as robust on the down in the economy segment. Even in our walkway business, we're not seeing it as robust as we see it in our premium segment. But the premium segment is definitely going on with a lot of tailwinds to that.
I guess, Mr. Joseph, it's something that we're seeing across sectors, right? It's really premium where the growth is, and the economy or the value segment seems to be struggling, unless you're talking about one of the odd retailers. That's a separate story. But let me again try and get to some more numbers. If you could give us some sense of same-store sales growth in the quarter gone by and the outlook, and also average realizations. I mean, while you're saying premium is doing well at a blended level, how is that average realizations graph looking?
So that's quite a few questions there. Let me answer the questions on, same-store sales growth. When you go against Diwali and you don't have Diwali, there is no love, as the person said before. There's no love in that season. And, to have a same-store sales growth is almost impossible, if not at all possible, right? So that was definitely the case for us. We weren't immune to it. We weren't in any way an exception to it. Equally, when you lap that and you come into this quarter, Diwali was technically in this quarter last year. So it's not like, oh, you should have an absolute massive gain this quarter. No, it was still in this quarter. It just happened to be early in the quarter. It's slightly later in the quarter this year. But according to our trend projections, what we're seeing is that growth is on track as we expected. And it's not over yet. It needs to play out through the entire quarter before we're able to say, hey, that did exactly what we thought that it would do, or we thought it would exceed what we thought it would do, right? So just to give you an idea of that, when you talk about realizations, right, we are definitely seeing that the consumer has moved up. But, part of it's also inflationary, right? If we're going to have a 7%, anywhere from a 5 to 7% inflation running, just your normal shoes, even if you don't go premium, is going to see that kind of hike, right? And we also went through a little bit of a hike when there was that entire raw materials crisis that we had about a year ago. And that hike, while it stabilized, it's not that it's gone down to pre-hike levels, right? Nothing ever does. So we are seeing those effects play into it as well.
All right, I get that point. Spend a lot more if you have to on a good quality pair of shoes, and it lasts maybe a little bit longer as well. So take that on board. Could you tell us about the acquisition, though, Cravitex, the Fila brand? At the half-year mark, I think it's done roughly around 30 crores. And you had warned us the last time you joined as well that expect pain for a couple of more quarters on the operational front. But how do you see this ramping up? Say, by the end of this year, what do you end at in terms of revenues? And also, for FY25, does this turn around at the operational level and revenue outlook?
Yeah, so I think we're very clear about a couple of things. One is we're fully aware of the investments, and we call it an investment, not a loss, into that business. The investments we're making into that business, because like everything we do, we're not playing for next quarter. We're really playing for the next decade and the decade after that at Metro Brands, right? So that's number one. We see that continuing to be dilutive to our earnings going through the entire fiscal year this year, including Q3 and Q4, at about the same rate, both in terms of revenue, but also in terms of profitability, as we reflected in Q1, Q2, which is fine because we've baked that into our forecast that we have internally, right? So that's number one. Next year, we start to get to be where it's not dilutive to our overall performance, and that's our target for next year. At the same time, take that opportunity of time to position the brand to where we want it to go for the future. So FY25 is going to be more about repositioning the brand and normalizing it down to where it's not dilutive to us. And FY26 is where you will see the acceleration of that brand.
You want to give us some numbers? Revenue for this year, 24, 25, and then as you talk about the acceleration, it's going to be sprinting, I think so. So if you could give us a number out there.
Well, I think you can extrapolate the first half into the second half very safely, both in terms of revenue and in terms of profitability, like I said, right, for the Fila brand specifically. However, as I look through the following year, I would rather go through FY26. I think it's important to begin with the end in mind and then get to that journey, right? And when you look at that journey, we look at the peers in that group of Fila. The peers have, upwards of 300 plus stores in the country today, as we speak, not to mention that by the time we get to FY25, they would have added on more. And, I think we would be remiss not to look at those numbers and say, where do we see ourselves in that growth curve fitting against the existing space, right? So.
Right. Mr. Nissan, just a quick sort of, more fundamental kind of question, and maybe this is not regarding shoe. Again, that premiumization. What do you think, what to your mind is going on? that the premium segment across, cars, bikes, hotel rooms, your business, across the board, right? The lower end, everything is doing poorly. And the upper end, the premium end, everything. What is going on? What has changed? And the question for businesses and investors is how much longer will this go on? The same trend will go on. Because the pool of people who can afford these things is limited. It is growing, but it's not unlimited growth in that sense. Or has everyone become wealthy? It's a very fundamental question. I'm sure it's come up. You've discussed it. Briefly, if you can talk to us. Go on.
Yeah, I'm not sure how to read that, like you said, right? So the question becomes, are they going into the premium products, whether it's a biscuit or whether it's a Diet Coke drink or whatever they might be drinking? But you see, even the liquor space, things tend to have a cycle to them, right? We've seen liquor sales boom, premium liquor sales boom a year ago, and then it seems to have flattened off a little bit. We use the lipstick indicator. There's a lot of multiple indicators we do, but we cannot fathom why on earth that economy is not trickling down all the way down to the bottom, right? Now, having said that, though, if you look at it today, we're a pyramid in the terms of income distribution. The forecast is we become more of a diamond look, right? So it means there's going to be more people in the middle class. Is that causing some of the shift into it? We're not quite sure what it is, but there's definitely a distinct difference. But I wouldn't use the words that I think you use. It's turbulent, in the lower segment. It's not turbulent. It's just not as robust as how we see it.
Okay. All right. Not robust, but hopefully will be robust. Thank you very much, Mr. Joseph. Appreciate you joining in. Great conversation as always. And thank you for joining us here on CNBC TV18. Well, maybe just a change in behavior, right? From savers to spenders, and that's sort of showing up across the board.